During the semi-annual monetary policy report to Congress, the US Federal Reserve Chair, Janet Yellen, said the central bank will be flexible on when to raise interest rates. Yellen reiterated that a modification of the Fed's forward guidance on interest rate does not indicate a set timetable to begin the rate hikes. In prepared remarks to the Senate Banking Committee, Yellen repeated that the Fed's pledge to be patient in beginning to raise interest rates means an increase is unlikely for at least the next couple of the Fed's policy meetings. The central bank adopted the guidance in December and repeated it in January. The chair said the Fed will likely first change its forward guidance by dropping the patient language if the economic conditions continue to improve. It means the central bank will have the leeway to raise the interest rate at any time it judges the economic data warrants it. The Fed chair underscored that there has been an overall improvement in the US economy and its outlook, as well as important progress towards the Fed's objectives of maximum employment. However, despite the improvement, Yellen said, quote, "Too many Americans remain unemployed or underemployed. Wage growth is still sluggish, and inflation remains well below our longer-run objective." She repeated that the recent drop in inflation was mainly due to an oil price drop, and the FOMC is reasonably confident that inflation will move back over the medium term towards the objective as the labour market conditions continue to improve further. Yellen also expressed her concern that slowing foreign economies, such as in China and the euro area, could pose risks to the outlook for the US economic growth. But she added that the Eurozone's recent efforts to stimulate economic growth could ultimately help the US economy. Analysts said the testimony did little to nail down the likely date of a rate hike, as her testimony and answers to questions shifted between confidence in a solid recovery and concerns about weak wages and signs the labour market is not fully healed. Moreover, Yellen strongly criticised a proposed legislation known as Audit the Fed, which is aimed to expand Congress's oversight of the central bank's monetary policy. She argued that Audit the Fed is a bid that would politicise monetary policy and would bring short-term political pressures to bear on the Fed. Yellen stressed the importance of the central bank's independence, noting that academic studies establish beyond the shadow of a doubt that independent central banks would perform better.